are just getting rocked in general. There we go. Then we have Sundial, which I talked about yesterday as being good for some swing plays. Coinbase up about 7% in the pre-market hours. Looks like Ascent Solar is also up pretty well. Rocket Company is up a little bit. I wonder what they've been performing at recently. Coinbase is actually under 20 bucks. Not too bad. That might be something worth looking into. It's going to be interesting to see how the market goes today, if it's going to be one that is going to show strength for us, or if it's going to be one that's going to just completely obliterate the tech and high growth plays that we have. Right now, we're talking about moving towards safety when it comes to buying up those bonds. And typically, when you have a lot of bond purchasing, what you're looking at with those bond purchases, ooh, hello, Lauren. What you're looking at with those bond purchases is that typically would be a sign that there would be more growth expected with those bond yields than what you would find within the securities. It would just be another way to ensure that sort of safety. And I think that we're just going to see maybe a little bit of a sell-off. We'll see if it continues for some of the plays that we have. Something that actually got some pretty big news by B. Riley, at least for price targets, would be GNOG. So that's something that I'm interested in looking at today. It's one that I've been bullish on as sort of a smaller play, a little bit more high risk, but also going for that high reward. And right now it's trading under $12 per share. And B. Riley came out and put out a price target on it of $27 per share. So that's pretty interesting. And really, I consider it about a $20 stock over the next 12 months. So for them to come out and say 27, for it to go to the high side of that is always good for that sort of confirmation. 20 would put us near that 2x. 24, of course, would be more like 2x. So those are some of the things that we'll look at. All right, S&P 500. Yeah, we'll get there in just a second. Let's. I got my screen share up. By the way, guys, this is the cryptos. We'll also talk about those today as well. By the way, I just wanted to throw out there that this is the first day that I'm actually hardwired rather than using a wireless connection. Oh, I apologize. My printer will be done in just a moment. I sent that print job a long time ago. I actually forgot that I did it, and now it's just coming through. Anyway, so if the video quality is good, let me know. If the video quality is still choppy, let me know. If it's still choppy, I'll have to get a hold of my internet service provider and either upgrade my service or find out why the current service that I have isn't putting through for live streaming. All right, so let's go ahead and take a look at the SPY. There we go. There we go. Down 1.35% at the open. So let's go intraday so we can actually see what's going on there. All right, yeah, look at that drop that we have on the S&P. Sometimes when we have a big drop like this, that story, it can really go either way. It can still continue into the market open, and then we could see, a little bit more of a bloodbath going on, and maybe it would be some larger sort of correction that we'd be looking at, or it could be something that would be just immediately shaken by the FUD that we have with all the bond purchasing and the significant dropping of the bond yields. So really, we're waiting for that story to play out to see really where that's coming in. And you can see sort of where the bottom of this is according to the SPY so far. So we'll see if we take just a quick little drop to shake people right in the beginning and then a little bit more of a recovery, or if it's going to be something that's going to continue throughout the day. Here, let's toss up the Qs. There we go. And if you take a look at the level 2 that we have up here, there's a decent amount of activity taking place that we're getting a lot of sell pressure and buy pressure, and sort of a lot of contention right in that middle price, about 355. So we'll see as we get into the open. We're a little under 3 minutes away from that open. So we'll see what goes on with the market. Nassif, do me a favor, and I'm going to come back to that comment about options. After the market opens, we'll get more into some of the options, and I'll talk some about the basics of the options. And one of the strategies that you can do when it comes to options in an environment like this, especially if like maybe those high growth plays are something that you're interested in, just a way that you can sort of play those that would be less risk than buying the stocks outright. So let me see. We have 2 minutes here until market open. And I mentioned about GNOG. So GNOG was actually holding on for us for a little while, up in the teens, and it's been a while since we saw $20 for it that we had. There we go. We had this big sell-off here, and I actually don't even really like this trend line. This is one that I'm going to change off these tops that we have here, and it sort of was breaking out, and then we got a lot more selling pressure, and it's dropped below the 50. And you can see that low that we had back on the 13th. That's one that should we retest that low, I think that's going to give us significant buying opportunities. This is for entertainment purposes only, and if I speak at all about buying something or selling something, it's because it's something that I would either buy or sell for myself, and then it's always up to you guys, as always, to make those sort of decisions. But this is like one of the second lowest that we've had as a low point. You know, the other lowest that we had was right here on May the 13th. So a lot of the risk coming out of GNOG, at least as far as we've seen it so far, there's been a lot of selling pressure over the past few days. A lot of charts look like this in the end of June and into July, like we have. All right, we're under a minute from the market open. Like I said, GNOG, if you check out the news on it, there's the B. Riley initiates coverage on GNOG, on Golden Nugget Online Gaming with a buy rating, announces price target of $27 per share. And right now, you can get it for near $11. Let's take a look at the pre-market. Actually, it's even closer to $11 in the pre-market. It's almost 11 even, 11.01. And you can sort of see where it sold off yesterday. So to see that sort of price target come out when you have this sort of downward pressure like this, as soon as we rotate out of this sort of environment that we have and find what sort of narrative we're going to get with the bond market up there, market open, I just saw everything jump. As soon as we get out of this environment that we have with all the bond purchasing, the drop in bond yields, we've seen that play out before, and it took us months the last time we talked about bond yields, whether that was a spike in them. We talked about mass inflation, and now it's more about sluggish growth and then deflationary pressures that we have. And it's just a narrative that's going to have to play out. And if you're a long-term investor, then you can watch those go. Look at the green disappear, by the way. We have a lot of even, and let's switch this around to look at the reds. There we go. All right, Polkadot, big old drop. Arcimoto, decent drop there. Senseonics, AMC, a lot of these, you can see high growth plays popping up in here for just these large drops, and those can really create some buying opportunities for us. For the high conviction plays, when you have these drops, it really de-risks your purchases. So it's going to set off stop losses when you have sharp spikes like that, sharp drops. And you know, when that happens, and those people's when those automatically triggered, even if it's an algorithmic trading platform that people are using or that institutions are using, and it hits those sell prices and just sells off, you get further selling pressure. I think it's just going to be a messy day today. And I would be really surprised if we don't see this initial huge drop at the beginning and then sort of softening throughout the day, either going sideways or even recovering a little bit from the lows. Let's take a look at some of the EV plays and see how they're handling this so far. Good morning. Let me see. We got Mamadou Hassan. Hello. And Des. Hi, crowd. High ground is getting hurt. Oh, yeah. High growth is getting hurt, Des. It's now open to the hedges having to cover for AMC. Wow. Yeah. Let me see. Good morning, Angelito. And yeah, we'll look at cryptos. I haven't forgotten about them. They just don't have that same 9:30 open, but we will move into those soon here. Actually, Coinbase would be a good transition there. That's one that I'm bullish on. That also crosses over into the crypto space. So what are we looking at here? NEO, holy cow, all the way back down to $43 per share. So that's a 20%-ish drop. Less than 20. It's more like a 15% drop from where it was at before, up at about $50 per share when you look at the 200 period moving average that we have. If this drops below 40, I think that we start to get into some really attractive pricing for NEO. If you think about like a $60 price target over the next 12 months, especially because 2022 is supposed to be an exciting year for them, and they're the leaders in their space in China, or one of the leaders, because Tesla is still over there, and Tesla's still doing fairly well over there. but this is a homegrown one for China. So being on its home space, that's something that we can't discount. So really, really super enjoy NEO, and we'll watch how this plays out. If we get pressure enough that pushes us down into the 30s, I think that's great buying opportunities, especially because you need to think industry-wide about EVs and the EV movement that we have in renewable energies. That's something that is expected to grow rapidly and has already started growing rapidly within the next 5 to 10 years. So we're already in that growth cycle. So when you see this downward pressure on these stocks like this that have excellent fundamentals, it's as close as you're going to get to a guarantee in the stock market that what we're seeing right now with the sell-off is something that's temporary. So keep that in mind when you watch stocks like this. And when it happens market-wide or it happens industry-wide and it's not company-specific news that's really impacting the financials of the company, those are things that you can usually count on there being a recovery for. All right, so in the pre-market, Coinbase was up about 7%. Let's see where it's at right now. All right, look at that ride that it took yesterday, up to over $250. It has been a while since we've seen it up there, and then today with the market pressures that we have, it's back down around 240. I think it got a price target of around $440 recently, and then also today there was a price target I think it was it a buy rating, but it was right around the $300 mark instead of being up as high as the other one. And people are going to be all over the place with Coinbase. It really does matter how they get their money, how that revenue comes in, which right now is a lot of it is through transaction fees, and those high transaction fees from retail investors. Institutions actually pay very little, even though they do the majority of the buying and the selling. They do so much smaller fees for being market makers, and also just for doing those big sort of purchases and incentivizing getting institutional buyers trading on Coinbase and Coinbase Pro, that there's hardly any revenue whatsoever. It's almost all in the backs of the retail investors. And there's the whole race to the bottom that was talked about for a while of rotating out of the transaction fees in crypto. So those are things that we want to keep in mind for Coinbase, that they are mitigating factors. Coinbase says they're not too worried about it, that it's something that they'll deal with over time. People keep on trading on their platform despite the high transaction fees. So even though they're working on other revenue streams and they're working on moving away from those transactions, that's more of an on the horizon more than an immediate threat for Coinbase Global. So those are some things to keep in mind as you watch the price action play out. Also, the fact that crypto is down considerably from where it was when they IPO'd. Here, we'll go out to the daily chart so we can see it. And sometimes I get a little bit too hasty when I zoom back in. So when you look at when they came out with their IPO, it was in the middle of April. It was when crypto was at its peak, and they were talking, and some people had like $600 price targets on this. And had crypto stayed in that strength in that level, I think we would see a lot better performance on Coinbase Global. But with the sell-off in crypto and the fact that the assets on the platform being predominantly Bitcoin, and then followed a distant second by Ethereum, and then all the other altcoins making up like 25 to 30% of their holdings, their price is naturally going to fall. So that's something that you want to keep in mind. So right now they're sort of moving sideways along with crypto. And if you're bullish on crypto with Bitcoin and with Ethereum, like I am, then when you watch this is something that you'll expect to also increase in price over time. So I do have a holding here. So when I talk about this, it's something that I am bullish on, and it is in my growth portfolio. So when I talk about Coinbase, it's one that I personally invest in myself. So whatever that translates to you guys, for however you take my position, I do have a long position in Coinbase. With that said, I told Mo that I would talk about cryptos. There we go. And we're still, I have our headlines drawn back on. Still trying to make up our mind on crypto, still trying to find out where that price comes in. I don't know if you guys watch Lark, I think it's Lark Davis. was just talking about this recently, about the lockup periods that are on Grayscale Bitcoin Trust, and that they sort of coincide with the dips that we see in the prices on Bitcoin. I don't know how much correlation is there, and he probably studied it more in depth than I did, but he has July 18th marked as the date to watch for movement one way or the other with Bitcoin's prices, or right around that date, the few days surrounding it, where we could actually see some sort of recovery. I really think that until we get the financial markets under control, we're still going to see, I mean, cryptos in general are going to see volatility. It's just the nature of them, and that whole store of value, the fact that they're not really necessarily tied to some sort of asset or commodity or anything like that. Really, we're just going to keep seeing these different spikes that we have. And so far, there's been a lot of normal activity, I would say, recently for Bitcoin. And it's just a matter of finding when it's going to break and which direction it's going to break. And I think over the long-term horizon, I think it's going to go back up eventually. I don't think that this is something that's going to crash back down to zero, or that it's going to be back down to $1,000 or anything like that. I think more than likely, as crypto becomes more established and better adopted and really finds its hold, that this is going to be more of an institutional holding. It's going to be more of a buy and hold kind of crypto versus something like Ethereum, which is going to be more the what's the platform for the DeFis and the different tokens that we have, and like the Polygon sidechain for it and everything, all those transactions. And when we get to proof of stake and the sharding, and we start to get that efficiency really nailed down, I think Ethereum is going to catch its stride, even if it does take a while to get there. All right, let me see who else we got here. All right, so that's Bitcoin. Moving into Ethereum. There we go. Bitcoin and Ethereum are decent to look at on WEBULL. WEBULL's coverage is not extensive for looking at the charts of cryptos. Bitcoin and Ethereum being around for a long time, being the predominant coins, there are ones that Apex, who does their crypto exchange for them. So when you buy and sell crypto on WEBULL, it's actually through Apex that you're doing that. I have some lines drawn on here for support and resistance, and you can see we came down and we tagged support, we came up and we just barely played around with resistance here, and now we're sort of falling back off again. We do have the 200-day moving average here converging with this 50 period that we have, the 50-day, and we'll see if that kind of locks us, if we're stuck within that for support and resistance, and hopefully something that we would break above sooner than later. Ethereum is my favorite in the crypto space. So when we look at this, a close second would be Polygon. And I might need to switch to CoinMarketCap to look at more of the charts on this. It's not going to show us a whole lot on, there we go. So this one is not traded on WEBULL yet. I don't know of any plans that they have in order to start trading Polygon, but the more offerings that they have, the better that it gets. The most popular ones, so Bitcoin, Litecoin, Ethereum, Dogecoin also trades on WEBULL. They have, if you go to their website, you can take a look at the list that they have, but you can see those there. Polygon, for its efficiency and low transaction fees, the fact that you can do the transactions for what is offered on Polygon for next to nothing versus the gas fees that you would pay trading, doing transactions through Ethereum directly. You do trade off a little bit of security and centralization when you go with Polygon versus going with Ethereum. It is good enough that a lot of people really trust what's there already, and they're willing to take on those risks of security and centralization for being able to take advantage of those lower transaction fees. So that way they don't cannibalize their financial position with that. All right, let's see what we got moving. Negative side, there you go. Yeah, we have a lot that's down. SOFI is actually getting a lot of attention recently. Thank you, 876J. Video's okay, good, thank you. I'm gonna go back and watch this when I'm all done and compare it to the video quality that I was getting when I was using Wi-Fi. This should be a much more stable connection, and we shouldn't have it breaking down or fragmenting. I also got a new modem recently that has higher throughput, so it should be able to handle better upload speeds. So that way your experience is a good one. All right, so SOFI. So if we look from when this one, and zoom out here, this one was all over the place. The lowest that we had, if I'm taking a look at this, $13, and right now it's sitting currently at about $16 on a day when pretty much everything is down. And this is gapped down from the day before. So we went from high 16s, now we're down in low 16s, and we're sort of fighting to hang on from there. And let me see. Let's move intraday on this. There we go. Let me hit the auto button here so we get a better viewing window. There we go. All right, so there's SOFI. You can sort of see right around that $16 mark. And if the lowest that we had was around 13, that's still a considerable downside. If we drop $3 from here, that's about a 20% fall. So that would be taking on a fairly significant risk if you let it fall down to those lows that we have. But if we get a continued sell-off in the market and SOFI does that sell-off with it and we start to get down near that all-time low again, those can make just incredible buying opportunities. That's also assuming that maybe what you're trying to do is time the markets if you're waiting to buy. Another strategy, if SOFI would be one that you're bullish on, this is one I do not have a position in and I don't do full coverage on it. But this is one that just buying in general. Dollar cost averaging over time, sometimes people do it only when the price is down. Sometimes people do it at regular intervals, every week or every 2 weeks or every month that they'll add to different positions. For me, I like to add when they're down, and depending on how rapidly they rise, sometimes if it's one that is a swing trade especially, I would definitely sell when it's up. But if it's a long-term hold, there were like earlier in Workhorse's history, I think that went up over $40 per share, and that was way too rich for Workhorse to ever maintain those levels. So I cashed out of my position, and then I bought back in when it fell back to the teens. And it's a smaller position, so my cost basis overall for Workhorse is very, very low. As a matter of fact, everything that I put into it was purely from profit, and I currently have a small holding. I sold half to minimize risk for exactly what we're seeing now with the market. So here, since I talked about Workhorse, take a look at them. So they're right now sitting just under $13. We actually had, I was going to say pre-market they were down under 12, but now they're just under 13. They're in the high 12s. So that's actually a nice leg up. I wonder if we had any sort of news coming out for Workhorse. Okay, Workhorse Group underperforms Wednesday. All right. So some people be treating this as just a buying opportunity, given how low its price is. We could look at the daily chart and see the different support levels that we have. So if you look at the lows, besides the sell-off, when there was a huge amount of selling pressure across the entire market, $7 per share. Mind you, I think Workhorse is highly risky. The fact that they don't really have any demand evidence for their purchases. We really need contracts, and we need deliveries, and we need it to translate to revenue, and then ultimately to translate to that bottom line, and really to show us that it's a company that would be really worth some serious investment. Until then, it's just going to be huge risk. But if I put this line right here at $11.50, you can sort of see that we bounced off of it pretty heavily. So I wonder if that'll keep us up above this 50-period moving average that we have. When I do my live streams, I'll look at the news on WEBULL just to see if there's anything big, because it will catch the big stuff. For some of the smaller companies that are out there and the high growth plays that you have, if you want to see get a better gist of the news, sometimes going to Twitter, putting in $ and then ticker symbol, and then kind of picking through to find what might actually sound legitimate, because you're getting a lot of trash, you'll get a lot of noise. But if you keep looking through until you actually find something that actually, first of all, feels legitimate, and then actually doing your own research. And I don't recommend clicking on the links or following the things that people have in there. Instead, I would actually go to maybe the company's website and check their PR And then you can usually find, I would go through different channels to kind of find out if the news that they're putting out there is legitimate. And sometimes you have highly legitimate news, and you're like, that's a reason why there'd be a lot of excitement from the people who closely follow these companies. And then other times it just turns out to be noise, and it turns out to be spam, and there's really no sense pursuing it any further. So Twitter's kind of nice for those popular and momentum plays, especially for the really risky high growth and penny stocks that wouldn't really have a lot of PR or coverage. It'd be the place to go where you have the people who really scrub and scour and like intimately follow those positions in order to see if there's any sort of smaller news that's coming out that would be a big catalyst to the fans of those plays or those investors or traders. All right, let's see who else we got. You can talk about options. Okay, so options. So if we were looking at options, and I have Workhorse up here, and we'll just talk about options for a moment. So if you liked Workhorse and you're like, I know that this company is going to pan out, but right now the market's selling off and you're trying to time it and trying to get those options. So assuming that you wanted a position in Workhorse, and let's say that you were willing to pay like maybe $12 per share for Workhorse, or even less than that, but you were bullish for its long-term outlook, something that you could do is you could sell put options on this, and that would mean that you would have to have cash in order to cover that. So at $12, at $100 per share, so you're looking at $1,200 for every put that you sell. Which, when people hear puts, they think bearish, but puts themselves are not actually bearish in nature. If you buy a put, that's a bearish move, but if you sell a put, that's a bullish move. So those are some things that that you would want to think about when you think about bearish or bullish. And calls, it can work the same way. That selling a call versus buying a call. Buying a call option is a bullish move that you would expect the stock to go up over time, but you would just be locking in a better price for it. Selling a call would actually be seen as a bearish move. So definitely something you want to consider when you do that. But selling a put can actually allow you to get the stock at a much lower price, and you actually kind of get paid to wait until it's time to buy those. But you have to be careful, because if you're the one selling, you don't have the rights to whether or not, depending on if it's a call or a put, you don't have the rights as the seller. It's the buyer who has the rights. So if you sell a put option, the person who bought that put option from you has the right to sell you those shares at or below that strike price that was decided on. And this is kind of a weird format to talk about it. It's better with visuals, so I'm not going to go on too much longer. But if you're selling a call option, then it's the buyer who has the right at or above the strike price in order to it's called exercise, and they'd be exercising the right to take those 100 shares per option from you. And as the seller, you're obligated. As a matter of fact, they call it assignment. You would be assigned to sell those 100 shares. And oftentimes, people are trading the options themselves. And really, it's not until you get close to that expiration date where actual exercising and assignment typically happens. Although it's definitely a risk that you take when you sell, whether it's a call or a put, you're still taking on that risk that you could either be assigned those 100 shares for a put, or you could be assigned to sell those 100 shares if it's a call option. So in this environment here, selling put options would be bullish. So if you have your high conviction plays, and let's bring up Xpeng, because I always want to type in the company name, and I know that'll work, but I always mean to type in the ticker symbol. But it's not, for some reason, Xpeng always gets me, because I want to type an N instead of a V. So when we look at Xpeng, you can see that gap down that it has. And this is like with a lot of other companies that we see right now with the current market condition. The overall bias is putting a lot of these stocks down below where they were trading at in the previous day or two. So if this is one that you're like, I would love to purchase this at $35 per share, then you could sell a put option with that strike price of $35, and then it would be assigned to you, or it could be assigned to you, that the person who ended up buying that put option could dump their shares at $35 because they would be expecting it to go down over time, whereas you selling those, that put option expects the stock to go up in price over time. So if you bought these outright, 100 shares right now, we'll call it $39. You're spending almost, you're spending $3,900 in order to buy those outright, and it could still fall, and you could have better opportunities down the road. So you're tying up a lot of your money real quick, and you could get a possibly better price if it does continue to fall by selling the put option instead, and you're not necessarily tying up so much cash all at once, and you actually kind of get paid by selling that put option. So it even sort of lowers your cost basis further by doing that. So if you're interested in options, who was this who asked for it? This was Nasif. So if you're interested in learning about options, I have a few videos. I need to put out some more of them. I'm going to continue my series this summer where I put out more about those basics so far. My next one is on put options themselves. So that I recommend, read about them, watch videos on them, do everything you can. You can do paper trading where you can practice with them, try your methods and stuff and see how it works out. And, just be very careful because there's a lot of money to be made, but there's a lot of money to be lost as well. Remember, it's always a double-edged sword when we talk about anything with the stock market. All right, what else we got? Great job, keep the good work. Peabody Energy. All right. So Peabody Energy, BTU, British Thermal Units. Nice. Yeah, if this moves inversely to the markets, then Alan, you would definitely have, and thank you for pointing this out. If this is one that moves inverse to the market, then that's great feedback. If you expect the market to drop, then you have a game plan. If you expect the market to go up, you have a game plan. So this is an individual stock that would move inversely, maybe. I didn't study it, but yesterday was a pretty big drop, and yesterday was a pretty big jump. And then today we're sort of in the middle, well down from where we closed yesterday, and then sort of making a nice little narrow range here between the opening price and current price here. Well, let's go intraday. All right. So people got a little excited around $11, and then it failed to break it, and so now it retraced about. Is this around 8 or so? Yeah. So we have about 50% retracement. So if this holds, then we could see it still act as sort of support. But if it breaks that 50% retracement, then it could keep on tumbling, and it would be wiping out all this action that we saw before. So that'd be interesting to watch how that plays out over time. Something else, I don't know if you guys are aware, those of you watching, but there are ETFs that you have where somebody else will be buying a whole bunch of different stocks of whatever type the ETF is based off of. And there's ones like the SPY and the Qs that will move with the markets, and then you have ones that move counter to the markets called inverse ETFs. So if you're somebody who only does long positions, but you expect the market to fall, you can go into an inverse ETF and take advantage of that. They're definitely out there. They're definitely ones that you can take a look at. And you always want to be careful on them because you can still, if the market doesn't fall like you expected it to, well then if the market goes up, the inverse ETF will move the inverse or the opposite direction. It'll go down. So those are things that you always want to be careful, and you always want to make sure that you're not over risking yourself. Just always want to protect the downside because it's hard to get to financial freedom. It's hard to trade with money that you don't have. And even if you're somebody who uses leveraging, or that you trade, if you use margin trading, you still want to be careful with that too, because if you lose enough money, you can get margin called, or it shrinks up the margin, your buying power that you would have because you lost that money in the first place. Thank you, Alan, for that. Hello, hear people talk about WEBULL. There you go. Yeah, so Googie, if it's something like WEBULL, if you don't actually own the crypto, instead you sort of holding a position. If you actually want to own the crypto, I would say to go through like outside crypto exchanges. Coinbase is out there, Binance USA, or if you're outside the United States, you can use Binance. Kraken's out there, Gemini. Let's go to CoinMarketCap real quick. There we go. So if you go to CoinMarketCap and click on exchanges, so it's right across the top, you'll see the different ones that you have. And I would most definitely recommend that you stick with an exchange that, as you read about, that you feel as though you can trust it. And when you look at the top ones, it's typically going to the bigger ones is where you're going to find a lot more safety and security. And even if you do buy the crypto on the exchange, it's still recommended that you move your crypto into a crypto wallet instead, where you can actually store those. Cold storage is going to be one of the safest ones. Staking your crypto is a nice way to earn some interest on that crypto as well. So you can see Binance, Coinbase, and looks like Binance is almost like 8 times larger than what we have for Coinbase. And then there's Huobi Global, Kraken, Bitfinex. KuCoin, a bit of a small one, but I've also heard some good things about this one as well. So if you're wondering about crypto exchanges, you have that. Another nice thing about CoinMarketCap when you look at it is that if you click on, there we go, let's go to Cardano. There we go. That'll load in just a moment here. But if you take a look at Cardano, you can also take a look at the exchanges. Let me see. There we go. So Cardano markets, if you scroll down for the cryptocurrency that you find on CoinMarketCap, when you scroll down, you can see where you can get it, and you can see the pairs that it goes along with. So there's Cardano with United States Tether, and then also Coinbase with straight up United States denomination. And then you can also see that down here, they show you the different crypto pairs and where you can buy them. So if you're wondering, where can I buy this? CoinMarketCap is usually pretty good at telling you on which exchanges you can find those coins. And then you can also, I like the trading view that it has here. Cardano, you can actually see the chart for now on WEBULL, but it doesn't backfill since it just starts from a few weeks ago whenever they started tracking it, and then moves forward from there. So CoinMarketCap is one of the places that you can go to actually see long-term price performance. So that would be one reason why I would come here to look at this versus going to, there we go, we'll make that bigger on the screen. I would come here for some of these smaller altcoins that we have versus trying to look at on WEBULL, just because WEBULL as a trading platform is much better for looking at stocks and securities themselves versus trying to look at cryptocurrencies. I would say that that's an area where they stand to have a lot of improvement is how they handle cryptos on WEBULL. CoinMarketCap's pretty good, especially with the different drawing tools that they have and indicators. And we can even toss on some stickers, I guess. There you go. So maybe people think that they live on Crypto Mountain or something like that, and Cardano's where they build their house or something. All right, that was dumb. I apologize. Let's move back to the stocks that we have here. There we go. I want to see some of this other performance. Actually, we'll look at the overall market bias and see what's going on. Wow. Carver Bancorp up over 2x today. Looks like we do have some movers that are out there. Let's maximize this. All right, so down 1.37 for the S&P, down 1.25 for the Dow Jones, down 1.47, almost 1.5 with the NASDAQ. That's a nasty drop. Anything over 1% in either direction is a big move in the markets. And so right now, these drops being over 1% are significant drops. Not that I need to tell a lot of you, but it's hard to look at sometimes when you see those sort of drops, unless you're somebody who takes short positions. If you take short positions, then today's probably been a very good day for you. If you had inverse ETFs or even some of the leveraged ETFs that would be inverse, those could be incredible. Let's see if we have anything here. Urban One is one that seems to make a lot of big moves. I think that there were some people on this channel who asked about it before. There you go. There we go. And let's go to analysis. It might be too small in order to see anything. That's what I thought. See if there's any sort of catalyst that we have going on. Rallies 12% around. A month-long 69% slide. Wow. So they must have bounced off the bottom. I wonder if we take a look at the daily chart and see what's going on. All right. So they weren't at an all-time low, but they were at a recent relative low price. We have a decent rally from there. I wonder if this is people covering maybe some short positions or something on top of that we get such a huge amount of buying. I don't know. How many shares have been traded here? 24 million, not bad. This one back here, 77 million, so about 3 times where we're at over here, but this day is still playing out, although we're after the 10 o'clock hour, so that's going to be where we see a whole bunch of the buying up until like 11 or so, and then most of the volume should be out for the day unless we get something else that moves it along. All right, let me check the comments. For Atomic Inc. long term. There we go. This is Angelito. Angelito, you're going to have to let me know if this is the one that you want. Basic Materials, Mineral Resources, Mining Metals, Atomic Inc., formerly CKR Carbon Core, is a Canada-based materials company. Graphite products, graphene-based components, range of mass markets. Okay. All right. Higher lows, good. We had a bit of a wedge formation here, and then we broke out to the upside, and then we hit hard resistance right around $1.40. Now we're back down to about $1.15. So, Angelito, it'll be interesting to see if this will continue to ride along this support that we have. Let me get my drawing tools out. So if we go across the lows, looks like it's not quite linear, but I'll toss that up there. It's close to that. It'll be interesting to see how this will hold up over time. I don't think that that'll continue forever because that would just be incredible for any stock to do that. But we'll see how long it takes to hold on to that as support. And let me see. It might just maybe move us up to about that $1.40 or so where it's at. Being a smaller company, yeah, we're not going to get any analyst estimates on here. 5 days ago, properties in Namibia through share agreement. So if they're a mining company, it's probably going to be about how much they actually produce and the demand that they have on graphene. And graphene I think it's still part of battery technologies that we have, and also making super strong, super lightweight materials as well. And I think that graphene itself is also transparent. I mean, the applications they're just not being studied. So this could be something for graphene that would grow significantly over time. But it sounds like from what I know from other areas of technology, when they're just finding out about the different technologies and the implications and how far they can go and the feasibility for mass production, these could be anywhere from like 5 to 10 years long. So it could be a very long time horizon. And so I would watch their production numbers, and I would also watch the demand for graphite and graphene in general to really know more about how this is expected to go. If I believe I was reading years ago about large flake carbon and being used in battery production and also being super important for that. And graphene, I think, is also highly electrically conductive, and I think it also goes into current battery technology. So it could be pretty exciting, and I really recommend. I can't recommend buys or sells, but I can always recommend education. Really educating yourself on the future of graphite, graphene, and then finding the leaders in that space. And if this is one of those companies that you think really fits some sort of niche and that they're uniquely positioned to do well, then you could find that diamond in the rough that that people like to dream about finding. I don't know long term what they look like. It looks like they have had quite a run of it this year. They're already way up from where they were at before. Even to go back to December, from 13 cents. So they've already 10x'd from there. So what's that next thing that makes that next jump for them? That's what I would be looking for. Also, I would look at bearish cases as well to see, what sort of risks or mitigating factors or headwinds do they have that would slow down their growth or impede their growth. And also, how high of a multiple are they trading at right now? Are they profitable? All sorts of questions to look at. Who else we got? What do you think of buying NEO call options with an expiration that's 3 to 4 weeks from now? Thanks. All right. Scopes to skill. Did I read that right? No, scopes to kills. There we go. So scopes, I'm not really sure if that's if your name comes from like a gamer handle or anything like that, but it does remind me of years ago when I used to play first-person shooters. I was always very terrible at them, and as a matter of fact, my gamer handle when I played always had decoy in it in some way or another. It'd be DEQOY, and at the time I thought I was clever with that. So what I would do is I'd find out by running out in the middle of things where the snipers were at, and then my friends who would be on my team would go through and they would clean house. So I guess it worked, but my kill to death ratio was always very terrible. All right, so NEO, and then you said about buying call options. So I mean, you could set up to buy a call option, and if you did it from 3 to 4 weeks from now, the difficulty, I mean, really, it's not a horrible time, but we have a lot of volatility right now, and that implied volatility might be something that would spike the price of those call options. So you might be trading off for a better deal price wise with NEO moving forward. You wouldn't lock up as much money, and if it does continue a sell off, then you're not obligated to buy those shares. The only thing that you would be out is the premium that you paid in order to buy that option contract. So that's one of the nice things of buying call options, is that you're not, as the buyer of the contract, you're not obligated to exercise your right to those shares of stock, the 100 shares per contract. So for expiration 3 to 4 weeks from now, so if you think that over the next 3 to 4 weeks that we're going to get some really good price opportunities, and then buying them, you're going to be at or above that strike price where it's going to make sense for you in order to buy them. So let's say that over in like 4 weeks time, you expect this to get back up into, we'll say the mid 50s. So getting back up to this peak that we saw over here, $55. So if that was your expectation, right now we're about $45, so about $10 per share. So let's say that you bought a call with a $45 strike price. Well, that'd be pretty close to at the money right now, which would actually cause you to, if you exercised it and it would stay at 45, you would be below your break-even price. So where I don't have the options tab up here in this view, so give me one moment, add a widget. Here, we'll toss up the options just so we can see what's going on. There we go. Sometimes I double click and I don't mean to. There we go. And so you said 3 to 4 weeks. So right now it's the beginning of July. Well, they go by the third, if it's a monthly one. Some of the monthly options are the third Friday that you have. So we could look at, let me see. Those are weekly. We don't want those. So we can look at July 16th, which would not fall too close to you. But if we look at August 20th instead, that would be the next monthly options contract that comes around. And look at $45 strike price. And right now we're actually trading above 45. So this is an in-the-money contract. So it has a little bit of intrinsic value going along with it as well. Looks like you're paying like We'll call it 375. We'll just go right in the middle of it. So that would add for 100 shares, you're spending, ooh, it just jumped. All right. Well, all right, we'll just call it $4 because it's jumping around so much. So you're spending $400 per contract. Actually, I'm sorry, it's down here now. It didn't jump that much. Okay, I'm sorry. We're so close to 45 that it just shifted down here on us. We'll still call it $4 for the premium. So 400, and so what that would do is it would add $4 to every share. So at $49 would be your break-even price. So if in 3 to 4, if by August the 20th you're expecting it to trade up above that, then you're getting it up above $49. Then you're getting a discount on that price. So if you expect it to be like $55, then you're making $6 per share. So you'd be, $600 to the good if you did that. So it depends on what your outlook is for NEO. We don't know the last sort of sell-off that we've had through a spike in the 10-year Treasury yields when that moved up so rapidly, and it was talking about hyperinflation and all that, and it scared everybody out of the high growth plays, understandably so. That lasted for 3 months. So we don't know when this is going to happen, because if it expires below that strike price, then you don't have any right to exercise, or it doesn't make any sense to exercise it. I believe that you can exercise below a strike price. It's just something that doesn't happen because it's cheaper to buy them outright from the market rather than trying to exercise the contract, and then you're overpaying to the seller of that option, that call option contract. So let's say it dropped down instead to $40 by August the 20th. Well, then you would buy the 100 shares if you still wanted them at $40 per share. It would make more sense just to buy them right directly from the market rather than exercise the call option for August the 20th at 45, because then you're paying $5 extra per share, which makes no financial sense. So it's up to you. I mean, really, it's what you think is going to happen between now and then. Honestly, I think that we need to see how this narrative that they have is going to play out with the current drop in bond yields now, talking about there being this flood to safety, buying up a lot of the established companies that you have and the huge companies that are already there, sort of being safe because they don't fluctuate in price very much, or buying the bonds because that's where they're actually going to get the return on their investment, or it's at least going to be a safe place where they won't lose their money. When does that stop, or when does it play out? Those are things that they would want to sort of consider before jumping right into a sort of options play. Sometimes people actually look to leaps instead. So for NEO, if you're bullish on NEO and you think over a long time period that NEO is going to go up in value, you can consider leap options. And back here when it was in the low 30s would have been a great time to buy some of those leap options because of how it impacts your break-even price. That would only put you in the mid to high 40s for a stock that you could expect to go, for anywhere in the next year to like 60, to the next year after that, maybe up even to $100 per share. You'd be doubling your money just by buying those options contracts, and then you would still have that opportunity to exercise the option contract in order to get them, assuming that it does what you think it does, or what it's going to do without tying up your funds in the process. All right. Who else we got here? Thank you, Nasif. I appreciate it. About one contract at 43.50 when the stock is around 43.25 for July 30th. Nice. So for July 30th, let me take a look at the options that we have here. There's the July 30th. Woo! Got it. All right, 45.50. All right, so looking at the current prices, we'll just call it $3. So what you're looking at then in order to break even at, we'll call it $3 for the contract, that puts you up at 47.50. So in order to exercise it and make good on it, when it makes sense in order to exercise that contract, I don't know what price you bought it for, but I'm talking about right now's prices. So if I were to buy this today, I better put my cursor over right here at 44.50 for that July 30th. Then I would expect that by July 30th that we would be back up above that 47.50 price in order for me to actually get a deal and make money on my purchase, or actually be in the green based on my purchase. All right. Let me see what else you got. All right, so I'm going to sometimes when I do some live streaming, eventually I'm going to buy a new device that has a little bit more horsepower. But sometimes when I do my live streaming, I get these sort of bugs because my computer is just live streaming is a resource hog, and I only have 16 gigs of RAM, which it's funny because I've been into computers for a long time, and I still remember my first computer had 256K of RAM, and I still remember my first 1 megabyte RAM stick, and that was something. And now we're talking 16 gigs, and it not being enough to do the things that I need the computer to do. It's just incredible the way that that technology changes over time and the way that it's advanced as it has. So speaking of that technology, though, and the advancements that we have, Kathy Wood, if you watch any of her presentations talking about the deflationary periods that we get, due to technological advances, there's definitely a lot of opportunity to be found with tech, and tech is something that over long time horizons should win out in the way it pushes down prices. There we go. All right, so I'm going to reopen WEBULL in just a moment, but I figured I'd stop back to crypto in the meantime. So when you look at these prices right here, this is the 24-hour price action that we have for Bitcoin, for Ethereum, and Ethereum has been overacting, we'll say, whether it's an overreaction downwards or an overreaction back upwards, with whatever we see happening in Bitcoin. So there's most definitely a correlation happening, but I wouldn't say that it's necessarily a direct one, where Ethereum does exactly what Bitcoin does. Ethereum's actually been a little bit cooler price action wise, but it's been very hot as far as active addresses compared to Bitcoin, and there's some metrics that actually surpass Bitcoin from time to time. One really interesting thing is the amount of staked Ethereum that you have when we're moving into Ethereum 2.0, that from, I think, November, December, they started staking for Ethereum 2.0, and you need a minimum of 32 Ether in order to do that staking. Well, that's if you're going to be the node itself. You can stake it with like Coinbase, for example. You can stake your Ethereum, and it doesn't have to be 32 Ether in order to do it. But then you can still take advantage. You'll get some of that reward money that gets put out there for being that that eventual validating node that you would have. But the trade-off is that if you do stake your Ether, it's locked and you can't touch it for anywhere from like 2 to 3 years until Ethereum 2.0 is fully launched, and we have the proof of stake taking place, and we have the sharding as well. So there's trade-offs to what you do with that. But I think that staking of Ether is some of that cooling off that we see, but also keep in mind that with proof of work being as it is, the proof of work miners need to cover their costs for mining. And so they're constantly taking their Ether that they mine, or the rewards that they get for validating the transactions, and they're dumping them back on the markets. And so that keeps the price down, that keeps it depressed. And something else to keep in mind is that when we do switch to proof of stake, and when we do actually get EIP 1559 hitting the live, the main net for Ethereum, right now it's on the test net. When it does hit, we get a base fee burn, and I had this up before about watchtheburn.com. There you go. Let's see if it's still up. So this is the Ropsten test net, and it's been having some trouble. I watched it the first day that came out, and just the they've updated it. All right. So if you take a look at this, you can see the base fee, and you can see the different inflecting that it has. And I think that base fee changes based on how congested the network is. Let's go to what's been burned so far, transactions. And then it's pretty cool when you switch it to USD. And this is not total since it went live on the Ropsten test. Now, I'm not exactly sure how often this this total fees burn resets if it's a daily thing. But just on the test net, this is almost $200 million worth of ether that's been burned. And I think, honestly, I think that's about a day's worth of burning. So when you watch that happen, it's actually kind of painful to think. Imagine having in your wallet almost 90,000 ether, and then so almost $200 million worth of ether, and knowing that it just gets, and this doesn't happen to you, but imagine that if it was in a wallet somewhere and it just got burned, that it would just be gone, that it's not there anymore. That's incredible to think out. And there's only about 116 million ether out there in the first place. So lots of incredible amount of ether that's out there. Eventually, we're going to go from about 4.5% inflation rate, annual inflation rate on ether, down to about 0.45. So almost 0.5% inflation rate. And so there's not going to be as much ether produced through rewards through proof of stake. And we're also going to have the base fee burned, where we're going to be burning off the ether that's being used as the base fee for the transaction. So between the two, we're really pinching off a lot of the supply, or the rate at which the supply is generated. And then there's the demand that's expected to grow rapidly over time, especially as we improve the scalability with the Ethereum network. Those are things, so increased demand, decreased supply should translate to some decent price action for Ethereum moving forward. And for those of you who are, I mean, this is all over the place too. I mentioned Lark Davis out there. Stockmo also, I know that he's talked about Ethereum a number of times. His bull case for Ethereum is about $10,000 by 2025. By then, we should see Ethereum 2.0 out there. It should be fully rolled out, and we'll really know better what's taking place. It's a really understandable thing. I think Visa started dabbling in crypto as well, that they have about $1 billion worth of transactions. I don't remember if that's to date or if that was from last year, but compared to the fact that it just wasn't a thing previously, and now it's a thing to actually be able to spend your crypto and for it to be translated into whatever denomination, or a United States denomination, for example, United States dollar that we see here. Having that happen automatically and seamlessly behind the scenes, where it doesn't hassle either the vendor or the customer, that it's just a smooth and easy transaction. And the fact that the Ethereum network is being used for that, I mean, these are just lots of implications, and it's super exciting. And I get super nerdy about it because I love tech, and I love I love talking about money and stocks, and just technology in general. So it's fun to watch. All right, let me get WEBULL back open here. All right, what else we got here? Titan Medical Inc. And then you're welcome, Scopes. Anytime, buddy. All right, okay, good. We got that back up and running. All right, let me get over to the chart here and let's look at Titan. There we go. Okay, so Angelito, I have TMDI as the ticker symbol for Titan Medical. So if this isn't the one, just let me know, and I'll look up the ticker symbol that you intended for me to look at. We have a decent consolidation here. The volume's out of it. We're trading sideways. The lows are actually moving upward with us. The tops are kind of flat. We could be forming a bullish. There we go. Forming and bullish, I was put together. We could be forming a bullish wedge here that eventually would have this price action break out over time. We actually have a positive slope for the 200-day on this, and it looks like we're almost flat when we look at the faster moving average that we have here. That slower one coming up and crossing the faster one is a good sign for us. It'd be even better if we start to see both indicators having a positive slope, and even better yet, if our price action is up above those moving averages, then we know that we're in bullish territory. So those are some of the things that you'll want to check out when you look at it. Thank you for the confirmation, and no problem, Angelito. We actually have some analyst estimates, two of them, a strong buy and a buy, $4 price target. So I wonder if they both came out and said $4 on that one. So that would be it'd be a 2x scenario for this. They're medical, so I want to look at the company profile. Healthcare service equipment. Computer-assisted robotic surgical technologies for application, minimally invasive surgeries. Very nice. So robotics is actually really cool. And as we get deeper into AI and machine learning, I don't know if they have that, but I'd imagine that it's at least some part in this. But as those companies progress, and robotics is improving all the time, especially with the AI and machine learning backed. But yeah, that could be cool. So I wonder, and maybe you would know more about this than I would, but I wonder when you look at these, like Titan Medical, for example, is it FDA approval that we're waiting on? Like, was that something that they really, they started maybe clinical trials, or because if it's medical devices, then they have to get their uses approved by the FDA if it's in the United States, for example. That's where I'm based, so that's what I think of. But Europe is also maybe is it the EAU? I'd have to go through and look. I always forget the acronym for the European equivalent to the FDA, for example. But really, we'd have to look at see their sales for the robotics equipment. FDA approval would predicate that. And predicating FDA approval would be the studies that they would put out. So if they're already in production and if they already have that approval, then what's holding their price action back now? Those are the things that I would want to know. What do their supply chains look like? What are their margins like? Those are also some other things to consider when you would look at them. That 2x opportunity is intriguing. So maybe it's something that you could think about, over time. So I'm just looking at the chart pattern that we have here from the highs and the lows. You could be nearing a break, but in either direction on this one eventually, maybe as it tapers here, into late July and then into August. See if there's any catalysts that are falling within those time periods that are going to push the stock in either direction. But the 2x opportunity is always a cool thing, because doing that 2xing in anything under like a 5-year period is incredible, and nobody should be ashamed of a little bit of profit taking along the way for things that wouldn't go up that quickly, especially if it's in a matter of like a day or a few days or even over several weeks. Because typically when you have that rapid of a movement upward, it's on hype. That might also be on fundamentals. But oftentimes when you have that hype and that rapid momentum, and this is a good case of it, you can see that it tends to rip back down and correct closer to either its present valuation or to more accurately reflect the fundamentals of the company that it's facing. So those are just some things that you want to consider. What else we got here? All right, and then maybe. Yeah. So market scares, whether fake or real scares that you have, fear. I mean, there's a fear index for a reason, right? When you talk about it, when fear, uncertainty, and doubt, what I think have been fear, uncertainty, doubt. Those 3 words, the FUD that we have has been talked about any number of times concerning companies, the things that are going to cause their stock prices to tumble, when really there's no bad things necessarily about the company. So really that's something that will shake a lot of investors, and that's one of the strengths that you have for looking at the fundamental value of a company and looking at the direction of the company and the industry that they're in, that you're looking at the big picture of it, and you're looking over long time horizons. And then when you have these shakeouts and these short-term volatile periods, they don't concern you or worry you as much, especially if you're getting a dollar cost average over time, regardless of where the price action takes you. Those are just some things to think about. And for me, I like the long time horizons, but I'm also one that if I see a highly volatile period, and if I see a significant drop in price, and I'm like, like for instance, Shift Technologies here, let's put that one up there. When I watched this one go down to $6.17, I think I was live streaming the day that happened. I went and I scooped up a whole bunch of shares when I watched that happen with Shift because, well, if we zoom out a lot. So actually, let's go to the weekly chart. There we go. And now we'll zoom back in so we can expand this. When it tagged a new low at 617, I expected a significant bounce from there. And you can actually see up to today's price action up at $8.23. I don't have all 33% of that upside. Let me see my price. I have about $1.80 up per share in my position when you look at Shift Technologies. I think I'm like 643, and right now it's at 823. So $1.80, 643. So I'm like anywhere between like 20 and 25% up based off that bounce. And I think that Shift is going to do well for us over time. I think it's going to have a hard time for a while until really it starts to come out on the balance sheets, until we really see a lot of the top line filled out and we see how it translates to the bottom line over time. But when I saw that low price happen, I thought that I would at least hold on to it as far as a swing play goes. And over the short term, I sold a call option on it. And even though that's a sort of a bearish move, it was actually not bearish that I expect to go down. I just figured that I would lock in some profit in the meantime. And I have a chance to trade that away again, to close my position on that and keep a hold of my shares if I want to. Just some things to consider. When you see prices hit rock bottom like that, that sometimes you get a bounce and it makes for a nice swing or even intraday play. I mean, that timing, it worked out. Honestly, it could have kept on falling. So there's always risk that you're going to take. But when I saw that brand new low put in, I figured that I would at least take advantage of the bounce, even though this is still looking pretty bearish overall, especially in the weekly chart that we have here. Let's go back to the daily. Apple, there you go. Yeah, times 2 long-term growth, especially when considered possible. Okay, scopes, I'll get back to that in just a moment here. All right, so this is the daily chart, and you can see this 200 period that we have, we're trading below it, and it's actually working fairly well as resistance for us. And that's good because that's something that we can count on to continue to act as resistance for us. So for somebody who's going to be buying or selling this over shorter time horizons, that you'd be doing this more as a swing play, well, we're kind of down near support right now. And that means that we could possibly go back up towards resistance. We did come out of a period where we had a lot of upward pressure, and now we're kind of getting more into a period where there's a lot of downward pressure in the markets. So it'd definitely be something to be careful over. When you're kind of deciding where you want your prices to go, it does look like we have a decent amount of support just below $8 per share. So 8 down to about 781. And that could be a decent fall from where we're at, but it could give you something to count on. And then you would have room upward, into the, let me see, where is that at? 881. So 60 cents. So about 7.5% upside. To each their own, and you'll have your own decisions to make. Let me see, got to have to kind of trade trend. I'll check that out. Good to see you, Richard. Don talks about digital Turbine because in the pre-market I saw it was about $62 per share. And this chart, if you look over the past few days, looks a lot like, well, almost all the other tech and high growth plays that we have over the past few days. That is just, it's not surprising. So we have decent amount of resistance right around $80. And check out this 200 period moving average that we have, the 200 day. So back here, when we dropped all the way down to $53 per share, we tagged support and then had a decent rally, fairly bullish for a time, still acting as well. Resistance became support, and then it went back to being resistance, and then we traded up above it for a little while, and now we hit another resistance. Let's zoom out. Right around the middle of this range, that $80 is about where we hit that resistance that time. Now that we're back between the moving averages, we could, since we broke that support in the 50 period, now that we're below that, now it could act as sort of range binding us between the two of them. And from right now, there's an 8 to 10% upside up to resistance. But like I said, with the present market and with the questions that are out there, do you make that trade and take your chances that support's going to hold, or you know, do you? I mean, for me, this is one that I am bullish on and that I have a long-term position in, and I do like the $100 price target that it has on it, which would be what, a 60% upside, a little over 60% upside from where it sits right now. And you know, that's not just me. You can take a look at the analyst estimates. There's 5 reported here, and if you go to tip ranks, it's another one that I like to look at. There you go. We'll see what kind of price target they have on it over at tip ranks and how many analysts are covering it, because sometimes you have a disparity between what WEBULL reports on and what you would see over at tip ranks. Sometimes tip ranks has a few more. So they're saying almost a 67% upside to that average analyst estimate of 107.60 over the next 12 months. And the nice thing about tip ranks, which I'm probably going to pull the trigger sooner than later on upgrading, especially if this channel continues to do well, that it would be funding these investments that I put in here. And honestly, when you invest in yourself in this way and you get better information, you can make better decisions. So, I mean, it might just make sense for me to make the to pull the trigger in any way. But there's a right here, it says date, and the important thing there is you can see how recent, and in my opinion, how relevant those analyst estimates are, because you can have different company or industry or sector news that comes out that changes the direction for the stock, and you could be looking at old information on price targets that are no longer relevant. You know, that can be pretty damaging. So if we go to, let's see if Coinbase, how updated that one is. I bring up this one because when it was IPOing, I mean, if you look, let me get rid of the advertisement there. If you look, the high analyst estimate of $650 per share, that's well over 2xing from where it currently sits. It was what, right there, last price at 237. So 2x to take you up to 500. So we'd have time for another 50% on top of that. But when you look, the lows 225. So honestly, looking at it over the next 12 months, and this is coming from July 2021, looking at it to July 2022, we don't have a lot of risk involved in this. It's what, 5% downside. That's if you can believe in the analyst estimates that are out here. And how many people did they say are covering this one? Now we got 16 ratings on this, 11 buys, 4 holds, and only 1 sell. So when you look at this, this means that bullish for crypto, which translates to bullish for Coinbase. When you look at this, average analyst estimate of 382. So another $150 up from where it's at right now. So about 60, oh, right there, 61.43. I keep doing these mental math calculations and I have it reported for me. So if you're not a mental math person that you like to write things down or calculate it, sometimes you can get those right on screen for you already. All right. So just back to this for just a quick moment. When you look at Digital Turbine, so for this to come down to 62, I think that especially if we keep up above this low that we had of $53 on in middle of May, when you had the bottom of selling for nearly every stock that was out there for high growth and tech. When you look at this, and that May 13th was sort of the end of the sell-off before we finally had this rally. If we don't have as much downward pressure, and I don't think that we're going to get as much downward pressure, as long as we stay up above that, I think that we're in good shape. And this could bring us back up near or even possibly break above the $80 point. But like I said, the analyst estimates are out there. The average analyst estimate being $100 per share. 60% upside, I'd say that's pretty incredible. All right, JAM. This comes to us from... right. Not currently seeing it right now. See where our prices are at over here. Grayscale Ethereum getting crushed, almost down 10%. Ooh, NNDM actually showing up green for us. All right, let's see where it bottomed out. 665. I wanted to put the horizontal up there to see more of what we have. So low today was 676. And that kind of goes along with these lows that we have here. And the thing is about NNDM, and if you weren't watching this channel, then yesterday when I talked about it, then you may have missed it. But right now, the cash position alone, if you divide it by the number of outstanding shares that are out there, put them at like $5.80 per share. So as far as this thing dropping, when it was down to 539, when that happened, they had about $1.5 billion in cash, which means that they actually their market cap alone drop below their cash position, I believe. So right now trading about 723. That's actually trading just a little bit above their cash position. So the value that the company puts out through like their revenue, for example, with their actual products and services that they have, we're only seeing a little bit of price off the top from their cash position from there. So there's a lot of risk coming out of NNDM. So again, this would be that you believe in the fundamental long-term outlook of NNDM, that they're going to get their LDM Dragonfly system 2.0, that they're going to be able to really scale that up commercially in order to get it out to more customers, that their inks and dyes do well, that their services that they provide also continue to flourish along with those. And really the services should move right along with selling the machines. The Dragonfly machines and also the inks should go along with that because they're proprietary inks. They can only be bought through Nano Dimension. So those are different things to consider for the revenue streams, that they really should work cohesively and they should go hand in hand. And people were asking me, oh, thanks, Brooke. It's the first time that I've been clean shaven in about a year, and I kind of forgot what I look like without the beard and mustache. Back to this though. So from Yoav Stern himself, he said there's about a $25 billion market opportunity for them. And their market cap right now, I believe it's around $2 billion or so. So that's 12.5 times their current market cap. That'd be if they were able to actually get a hold of all 25 billion. And I don't know that they will because of different competition and other technologies. Really, the faster that they can scale up to full production mode with their 3D printing, with the HPEDs that are out there, the high performance electronic devices. You can't call them boards because they're not boards. They're any shape that they need to be. And they're layering technologies that just immensely drive down cost. I think really what's holding back is the fact that they're not to production scale, that mass production just isn't there. And as they build out that technology over time, and if they can get to that mass production over the next 3 to 5 years, then we can see really huge implications coming out and really taking a large part of that $70 billion printed circuit board. I'm sorry, PCBs. I wanted to say motherboard. The printed circuit boards that are out there right now, that for them to produce, it's wasteful and it's toxic and it's expensive, and then there's intellectual property risks. So just some things to consider when you look at NNDM, that they're highly speculative right now because they don't really have a lot of revenue coming in, and you sort of have to take Yoav Stern for his word that they're going to continue their acquisitions and that they're going to continue to grow. And so really you're taking on a fair amount of risk, even though there could be a very high upside to this. That means that, with higher risk also comes higher reward. So if you're looking for those higher rewards, you still have to be aware of the risk that you pose to yourself by investing here. So stay diversified and everything, and buy not only tech, but also, get yourself a couple, get yourself into bonds and some more established companies. Speaking of which, somebody did ask about Apple. It was Scopes. Oops. There you go. I always want to spell the word Apple for the ticker symbol, and it's always 2 A's, and I don't know that I'll ever stop that. They've had a decent rally recently. Endless estimates on this. So for Apple, we'll see about the Apple car. Honestly, building cars is expensive, so really it would take a partnership. I know that one that they had with Hyundai, I think it was, that fell through, and because Hyundai said, we want Hyundai cars and we don't want you to have as much control as you're asking for building these cars. And I think that there was another, I don't know if it's going to be spoken about here or not. Okay, just at a quick look, I don't really see it. I didn't expect to. I feel like there's another partnership that was discussed for Apple. Look at that resist that they have right at $145. It's like a tabletop sitting across those two previous highs, and then it falls right back off of it. So if I was looking for a buying opportunity in the near term, if I was going to like swing trade this, I mean, honestly, at 145, a short position because we were bumping up against resistance, that's something that could have made sense. But if you're looking at this as the trend is your friend, they're still bullish. They're trading up above 250-day moving averages that are up here. They're both positively sloped. This does look like a fairly steep run up, fairly fast. So as far as if the card technology is what we're looking for, I really think, and I don't know how well this would happen, but looking at ways to integrate their technologies broadly across a multitude of EVs, I think would be something that would be desirable for Apple, and it would really keep margins down for Apple. But then again, if they have another car company produce for them, I don't know how that translates into their margin, how it's going to affect how much of the revenue is going to be eaten up by that production in the first place. So it's kind of mixed, but when you look at the analyst estimates, we have 41 covering Apple because they're absolutely enormous. They're worth trillions of dollars by market cap when you look at Apple. Just an enormous company. So you're going to have a lot of coverage on it, but you're also going to have a fair amount of stability with their prices. And this is something that ARK Invest was given a lot of crap for selling their Apple stock, that people looked at it as though they were bearish on Apple. And they said, well, we can't hold cash in our ETFs, but what we can do is going to hold onto a security that is stable enough that it's sort of like having cash. So what they did was they held Apple, and then when they needed more cash for making other purchases, they sold their position in Apple so that they could make those some of their position. They didn't completely sell out, but they sold not because they were bearish, but because they wanted more cash to use in other securities. And so that was one of the main purposes why they had their position like they did in Apple. So, I mean, honestly, it is looking pretty bullish. We still got these highs continuing, got these lows continuing upward. And then we also have the analyst estimates on top of it that we're still below the average by, what, $18? So over 10% upside for a company that's already grown as big as Apple has, that they still have a fair amount to run on top of that. For a blue chip stock, that sort of percentage isn't so bad. And then your downside on top of it, $16 going back the other way. So you're kind of sitting just between the low and the average analyst estimates, sort of sitting even. Then we have a bullish case of 185 on top of that. So let me get back to your actual statement here. It's a buy right now for times 2 long-term growth. I mean, the thing is for Apple and for 2xing their current price, it's not that they can't, but it's much harder for Apple to 2x already being worth trillions. I'm not sure if they're a $2 or $3 trillion stock by market cap. Let's go to Yahoo Finance. By the way, it's pushing on to 11 o'clock here. I'm going to wrap up my live stream by 11. I will talk about this, and if you have anything else you wanted me to take a look at, just let me know. There you go. I knew they were between 2 and 3 trillion. So the market cap on Yahoo Finance, 2.365 trillion. So if they were to 2x from their current price, that would make them like a $5 trillion company. And I think that might make them by market cap the richest company in the world by a lot. So our most valuable company in the world by a lot. So I don't know about 2xing just because of an Apple car. It might be something that would really help them out. It might be overextending, moving out of their wheelhouse. But if they have somebody else produce that car, somebody that would already be an established automaker that would just be integrating Apple's products and software in it, that could be lucrative. One worry that I have for Apple, and it's less of a worry now than it was a few years ago, if you think about the digital assistants like Siri versus like Alexa through Amazon, Apple got put behind for a long time because they tried to, I'm pretty sure they were either using their own machine learning with their own data, or that they were trying to hardwire or hard code Siri in order to work the way that they wanted Siri to work and keep things very closed and in-house for Apple. And it seems like only recently, in the past few years, have they come to the idea that that data has to be much bigger than them, and it has to be a little bit more open. And they've actually been pretty good at keeping things proprietary and closed off while still opening up to that data. And so I wonder, with an Apple car, especially if autonomous driving is going to be one of those things that play into it, where does their data come from, and how open are they going to be with it? And then, what sort of market does that play into? How much penetration are they going to get in the EV space? There's a lot of affluent people that really do like Apple, but there's also a lot of people that really like Android, for example. The huge following that Apple has is certainly something that keeps them in this profitable area. And so as long as that stays the case, I think they can continue to dominate for a while. All right. So I think I'm going to wrap things up for now, guys, and we'll keep an eye on the markets and keep an ear to the ground for more about those dropping bond yields and what the Fed has to say and what it's being attributed to, because from that we could get our game plan for just how much farther tech and high growth and maybe the overall markets could fall, while we're trying to figure out where it's all coming from and what sort of deflation we're seeing and what sort of economics state that we're actually in when we have numbers that sort of report growth, but it's not really as strong as we thought it was. And I think that's where some of the FUD is coming from when we look at the economics that we have, and that would explain some of the reasons why we see the markets drop as they are. It looks like they've recovered a little bit recently. There we go. But I'm going to take this time. I'm going to start looking through a few specifics after I'm done live streaming here, and I'm going to find some of my favorites. GNOG, getting that new price target. Yeah, I might need to do some dollar cost averaging there, especially if it's down below $12 still. So just some of the things that I'm considering. Thank you guys so much for stopping by. I really appreciate it. And, I hope to see you tomorrow. I can't believe it's Friday already, but I guess for me it's a short week because I did get back from my honeymoon on Tuesday night into Wednesday, and it's nice to be back at it here. I'm looking forward to a big weekend of getting things laid out and planned out. I hope you like the new studio space that I'm establishing here. I got some decorating to do in the background yet, and also some things to work out with the lighting. During the day, I actually have a window here. I can use some daylight, and really give me that feedback, if you will, about the video quality that you saw when we were in WEBULL. I was hoping that this would be sharper. I'm going to take a look at it myself and see that it is sharper now that I have a hardwired connection in my office versus the Wi-Fi that I was using when I was not yet in my office. So thanks again. We'll see you guys tomorrow, and have a great day.